I want to start this video by being very honest with you. I was losing a trader for over 2 years. I would lose $50 here, $100 there. If I made $60 one a day, the next day I would lose 200. I felt completely stuck in a toxic cycle of losing money, and I couldn't find a way out. Trading felt like extremely difficult, frustrating, and honestly exhausting. That's all changed when I started doing a few very specific things that completely transformed my trading. Fast forward to today, I have been in this business. I call it business because that's how you should treat it for over 6 years. I have experienced the highs and low and lows. I was finally able to find a proper strategy, or I should say, blueprint that helped me to become profitable. And in this video, I want to share the exact mindset that I created for myself and the habit that helped me break out of that losing cycle. If you have been struggling, make sure you watch it and paying attention. The biggest mistake I have made early on was relying too much on indicators and instead of understanding the price itself. My chart were full of lines, RSI, MACD, moving averages, Bollinger Bands, you name it. I thought more indicator means more confirmation, but all it really did was distracting me. Once I removed most of those noise and focused on reading candlestick and price action, everything started to make sense and changed. Price action tells you how the stock is actually behaving, how it reacts to support and resistance, how it consolidates, how strong buyers and sellers really are. Instead of waiting for indicator to cross or bounce, I started watching how price moves around the key levels and how it reacts to overall market. That's when I stopped missing the big moves. Today, the only indicator I constantly use is VWAP, and that's because it works extremely well when paired with price action. The sooner you stop relying on indicators and start understanding the price, the sooner your trading will improve. But none of that really matters if you don't control risk. Risk management is the single most important things that pulled me out of losing cycle. Risk management simply means planning everything and planning every trade before you take it, knowing how much you are risking, where you are getting out if you are wrong, and whether the potential reward is actually worth the risk. If you are risking $100, you should be aiming to make at least 200 or $300. Most new traders lose money not because their win rate is terrible, but because their losses are bigger than their wins. So that was actually me. I would make $50, then lose 100 on the next trade. So over time, that math guarantees failure. Once I started only taking trades where the rewards was greater than the risk, everything flipped. And by the way, it started making sense. Even with the win rate around 40 to 50%, you can still be profitable. That's only possible if your risk to reward ratio is solid and makes sense. If you lose three trades, you should win one trade if your reward to risk ratio is 1 to 3 to break even. It makes sense, right? It's the proper math. That's when my account started really to grow as soon as I managed my risk. Risk management is foundation of trading. If you miss in this part, you're never gonna make it. If you don't manage your losses, profitability is impossible, especially with the small account. Another thing that helped me massively was focusing on charting every single day. Charting is not about drawing random triangle on a 1 minute chart and hoping for breakout. It is about understanding the bigger picture, identifying the key levels on multiple time frame, understanding market sentiment, seeing the pattern that repeats again and again. For example, strong breakout often happens after a long period of consolidation. Stock that sell off hard at the open bounce later in the morning, and a stock that fell at the same resistance multiple times often turns into great short for as a setup. So those obvious observations come from screen time and repetition. You don't need expensive platform to do this. Tools like TradingView, Thinkorswim, Interactive Brokers, if you have one, that's good enough. When I started, I spent hours every evening charting, saving, setup, and reviewing what worked and what didn't. That daily practice made me a better trader faster than everything else. And finally, the most overlooked part of trading is routine and discipline. Before I had routine, I would wake up minute before the market opened and chase whatever was running, stock was trending on social media. So that was a recipe for disaster. So once I created a real process, everything changed. Every evening, I was reviewing my trade. I journaled my mistake, analyzed my chart, studied the day news and what the reason was for the move, and planned 2 or 3 trades idea for the next morning. It took time and effort, sometimes 2 to 3 or 4 hours a day, but I was tired of losing. So after a month of sticking to that routine, I noticed something powerful. My losses got smaller. I stopped chasing trades. Trading is not about predicting the market, it's about following the market. And it's about managing your risks and following the process and staying disciplined. If you treat the trading like a business and commit fully to process, the results will follow. And if you don't learn how to lose properly, you never learn how to win. Become a good loser. Become a really good loser, meaning your loss should be smaller than your win. Focus on your loss more than you focusing on your win. So thanks for watching. If you like this video and you found it helpful, make sure you like this video. Make sure you subscribe if you haven't, and I'll see you in my next video.